Great, thank you very much, Eloise. So this final slide, so just give you a very brief update of what we've been up to at Kensington. So to follow on from some of the discussions, obviously we've just talked about shared ownership and some of the other items that came out in the panel debate. So in terms of the Kensington focus in new build, we are looking to launch shared ownership hopefully in the next 4 to 6 weeks. We have to do it in a way that means we protect our service levels, which are really important. But we're kind of ready to go with that. We just need to work on a launch date. Also happy to announce today we do have a new product we're launching today. So we talked earlier in the panel debate about eco mortgages and how lenders can support the building industry becoming more green. And today we're announcing that we have a new product, our eco range for new build. We already have one on non-new build properties. So our eco mortgage will be if a customer presents their new build property that is A or B EPC rated, then they'll be eligible for a £500 cashback paid just after completion, which hopefully really supports the builders becoming more green. You know, there's news out today about the government and internationally looking to stop selling gas boilers in 2025. So there's lots of things like eco down, green heat pumps, etc., which will become far more prominent, and we're very keen to support that kind of thing. So that will be available on sourcing systems tomorrow. We also are looking, as I mentioned in the panel, to find a way to do 95% for new build. We currently do 90% LTV outside Help to Buy for new build houses and unusually flats, and we're looking to how we can get that to 95%, possibly in July or August. And as usual with new build, we have dedicated underwriting support, dedicated team managers. We understand that service and expertise in this area is absolutely critical. So that's kind of where we are in new build. Lots of new products in the pipeline, lots of new areas like shared ownership to go into. So I think the next 3 months our new build proposition will really, really grow. In terms of our general business update, we are looking for a very strong year this year. The market started very, very strongly. So we had our biggest year pre-COVID, so the year before COVID, where we did £1.5 billion worth of lending. This year we're looking to get closer to £2 billion. So thank you for your support in advance of that. And to do that, we need to build much more capacity so we can handle more cases. So we've recruited heavily during COVID. So we've got about 60 new people in the business. Most importantly, we're focused on underwriters. So we are a manually underwritten business. Every case gets manually underwritten, so we need lots of underwriters. So we have 50% more underwriters working in the business today than we had last October. And we're currently in the middle of recruiting another 50%. So we'll have doubled underwriters by the time we get to the end of the summer. So we'll be able to do a lot more cases. And we've also increased the number of new business assistants and field sales BDMs, and also telephony BDMs. So service becomes very, very important. We are at about a 2-day service and very, very keen to stay that. We know how important quick service is. So part of when we launch some of these new products will depend on when we can do it, but we need to keep service at 2 days. And also this week we are now our BDMs are field based again. They're going out to see brokers again. So if you're interested in seeing your local BDM, please get in touch. We're only going to do that obviously when you're comfortable to see them and we have the right social distancing protocols in place. But great to be able to offer that again, as well as we'll continue to do our virtual meetings. And then finally, just a note on COVID recovery products. Self-employed is a huge part of our business. It's over 50% of what we write. So happy to clarify our kind of BAU policy. So we normally use last year's accounts. So we normally use 1 year's accounts, up to 85% LTV, up to 90% if you've got 2 years accounts. And lots of questions about how we'll treat bounce back loans, furlough income, etc. And happy to clarify for our kind of normal lending, we will use last year's accounts, even if you've had, doesn't matter if you've had a bounce back loan. Clearly, if you're paying it back, we need to take that as a commitment, but that's fine. If you've had furlough income, as long as the business isn't still getting furlough income. If you've had one of the government grants, that's also fine. So we're not going to penalise anyone for those kind of things. We just need to see your last 3 months of being kind of clean and without government support, and then we use last year's accounts. So that's, you know, for businesses that have had a reasonable year last year, even with all the government support, they've had an okay year. However, we will see when people do their SA302s, which should start coming through for the last tax year in the next couple of months, we will see, sadly, some people have been impacted by COVID and have had a drop in their income. So what we'll do is we'll give those customers the option to use the average of the last 2 years. So if they had a bad year last year, we'll average the last 2 years. And hopefully that gives our self-employed customers the best of both worlds. If they've had a reasonable or a good year, we'll use last year's. If they've been hit, we'll use the last couple of years. So hopefully it's a bit of kind of common sense lending. So yeah, lots to look forward to. The market is really strong. We're looking for a big year this year with your support. We have recruited heavily and invested technology to fuel that, and we've got lots of really exciting products on the way. So thank you very much. You know, we had 1,100, nearly 1,200 people registrations for this webinar, so really appreciate your support. This is something we'll continue to do, and I'll hand over to Eloise to wrap up for us.
No, absolutely. To absolutely echo that, Craig, thank you to everyone for being a part of this event.